So good to have you join us today. Hello and welcome to Business Daily. I'm Lee-Jiun in Seoul. We have a lot lined up for you today, so let's get started with the day's highlights. Shoppers are splurging on China's Singles' Day event, and total sales are already expected to far surpass last year's tally, with customers spending billions in the first few hours. Sharing is caring. Sharing also means saving when it comes to money, energy, and resources. And now, led by technological advances, the concept of sharing is reshaping our economy. But first, Korea's household debt continues to get bigger, and the expansion is showing no signs of turning around. According to a report released by the Bank of Korea, outstanding household loans came in at $541 billion as of October, up by $7.7 billion from the previous month. Now, this is the largest monthly gain on record since 2008. The sharp increase was largely attributed to a rise in mortgage loans, with over 11,000 homes in Seoul changing hands last month, up 56% from the October average over the past 9 years. The central bank added this snowballing debt is fueling fears in the country as a rate liftoff from the U.S. Fed Reserve is looking more imminent. On the back of growing domestic demand, the data are showing signs of improvement within Korea's job market. But whether this means we're seeing a rise in the number of quality jobs is still questionable. Our Hwang Ji-hye reports.
The number of new jobs added in Korea has hit the highest in 5 months. Statistics Korea data show that the total number of employed stood at over 26 million in October, up 348,000 from a year earlier. While the overall jobless rate dropped to 3.1%, that for the younger generation, which has long been a source of concern to economic policymakers, was also down to 7.4%, marking the lowest level in almost 2.5 years.
Jobless rate among those aged 15 to 29 dropped because of the number of employed in the age group soared. Among the 101,000 that got newly employed from a year earlier, 95,000 were in their 20s.
The overall improvement in the jobs data comes on the back of the Korean economy gaining momentum recently, thanks to government measures to boost domestic demand. The economy grew 1.2% in the July to September period from the previous quarter, beating market forecasts and posting the strongest quarterly growth since 2010. But experts say more employment does not necessarily mean the quality of jobs are also on the rise. In fact, job growth in the manual labor sector, where people earn money by cleaning or delivering, which are mostly part-time jobs, stood at the highest compared to other sectors.
We have to look at the overall situation when we analyze the current job market. It's because a rising number of employed is not leading to a rise in household income these days.
Experts add that such positive momentum in the job market is unlikely to become a longer-term trend as Korea's exports continue to drop due to slowing global demand, especially from China. Hwang Ji-hye, Business Daily.
Meanwhile, Korea's top financial watchdog is set to rein in 50 more so-called zombie companies this year from last year after finding 175 SMEs are so deep in debt they're unable to even make their interest payments. The Financial Supervisory Service on this Wednesday categorized 105 firms as falling under the lowest D rating, subject to shutdown, while the remaining 70 companies tagged with the C rating will be put on a mandatory debt workout program before business can be normalized. The manufacturing sector saw the biggest hit and the largest pool of insolvent firms since the 2009 financial crisis, a downturn the watchdog attributed to the prolonged economic slump in Korea and abroad. $1.9 billion in loans was extended to these companies as of September, according to the FSS, which added that the sum was unlikely to have a debilitating impact on the nation's banks. It's Singles Day in China, or Double 11, or the biggest online shopping day in the world. Celebrating the day, thousands of Chinese online consumers have been and will continue to shop until they drop before the day ends. The shopping spree also provides good examples of how Korean exporters should restructure their marketing strategies for the Chinese local market. Our Shin Se-min has the story.
It was an impressive start. E-commerce giant Alibaba Group logged over $3.9 billion in the first hour of China's Singles Day. And the mega retailer's total gross merchandise volume keeps on climbing as the 24-hour deadline approaches. November 11th, 11/11 started out as an obscure event in the 1990s, where the country's bachelors and the bachelorettes celebrated being single. But in 2009, Alibaba turned it into an e-commerce phenomenon, with sales reaching nearly $9 billion last year, all through online shopping. It's much like the US Cyber Monday or Black Friday, except the size of Singles Day sales is 4 times that of Cyber Monday. On this day last year, Alibaba raked in total sales worth over 10 trillion won, or $8.6 billion, which is 100 times more than what all Korean online retailers combined have made in China in the past 5 years.
China's online retail market only takes up 10% of the entire domestic market, a minimal portion for now. But the speed of growth is so fast, it's hard to predict.
Ranging from electronic goods to clothing, the sales event also brings in over 5,000 overseas brands from 25 countries, including Korea, US, and Japan. It's one of the better ways to publicize Korean brands to some 20% of the world's entire population online during a 24-hour window.
In order to turn this mega sales event into a long-term opportunity, local exporters need to better come up with marketing tactics targeting specific age groups, mostly those in their 20s and 30s, and particular regions.
With China rebalancing its economy to one based on consumer spending, following its slowing economic growth, it has become much clearer that Korean exporters, mulling over options to restructure their export strategies, should put heavier emphasis on shipping consumer goods to China. Shin Se-min, Business Daily.
We're seeing the emergence of a new economic system alongside the traditional capitalist market, and a new system is a sharing economy. This is from American economist Jeremy Rifkin, who says we now live in a world where people share everything from clothes to cars, homes, and even knowledge. Take a look.
Various studies have shown that if private cars are replaced by shared vehicles, nearly 9 out of 10 cars could be taken off city streets. So this is where the power of sharing comes into play. Professor Lawrence Lessig of Harvard University Law School first used the term sharing economy in 2008 to describe transactions for lending and borrowing rather than purchase and ownership. But the term sharing economy is not really a new concept, as the idea of sharing has long existed with homestay or sharing cars. But in recent years, in line with advancing technologies and the rise of social networking services, many lending and borrowing services have emerged for clothing, books, cars, and even houses.
I live in Sinchon, but I work in Gangnam, and there's a special discount for commuters who use the service, so I end up saving. Also, I don't really like taking crowded public transportation.
Back in 2011, Time magazine identified consumerism based on the sharing economy as one of the 10 ideas that will change the world. In line with those projections, the Korean government has been welcoming the sharing economy with open arms, but how can the country further encourage people and companies to join in?
And to tell us more about this, Kim Il-sun, Senior Fellow of the Asia Institute at Sookmyung Women's University, joins us in the studio today. So good to see you.
Well, my pleasure.
All right, so I know we quickly mentioned in the report what the term sharing economy means, but how does it exactly differ from original like rental services? And what does it exactly mean? What does it mean like products? Does it include products or everyday goods or what?
Sure, it can be confusing. Sharing economy is a peer-to-peer based sharing of access to goods and services. As opposed to rental may refer to B2C or the business to consumer transactions of temporary use of the goods and services. Sharing economy refers to sharing what's already available by one user to another user. So it's sort of creating a sharing community. The housing, cars, or the clothing are the perfect examples of the sharing economy. The key to sharing economy is like not producing new goods and services, but sharing what's already available. So we call it a sort of a collaborative economy or collaborative consumption.
All right. Well, now most people are familiar with Airbnb, which actually lets people list a room or a house for rental. And of course, Uber, the car sharing application. And they both have become multi-billion-dollar companies.
Sure they have.
So this sharing economy, what's in it for companies and people and also the economy as a whole?
Well, the economy is growing so fast in the sharing economy. Like you said, Uber just became less than 6 years or so, became $41 billion company. And Airbnb became $21 billion, just renting, sharing cars or sharing rooms. They become mega companies in just a short period of time. There are two factors that trigger the sharing economy: money and technology. Back in 2008, when we all went through a financial crisis, people are more inclined to save money and to conserve goods and services. So they were looking for sharing of the things, and they found these services, and possibly they can save money. They thought, well, this is a smarter way to spend. Also, the proliferation of the SNS and smartphones also triggered the sharing economy because using those services, you can locate the needed services. Also, you can do the peer-to-peer evaluation of the target services so the consumers can get a smarter decision in using those services.
All right. So in order for this sharing economy to grow, we need to support startups in that related field. But then there are growing concerns about this hurting traditional businesses.
Of course, so there are major issues, like three concerns: legalities, labor issues, and macroeconomies. The many sharing economy businesses do not necessarily meet the expectation of the current regulations or the current taxation codes. For example, Airbnb is criticized for not paying taxes for the rooms they offer, and the Uber taxi drivers, they don't necessarily have to pay taxes. So there is a growing concern of the legalities on those services. Also, Uber is also creating controversy between existing taxi drivers and the new Uber drivers because the new Uber drivers necessarily they are basically taking away the revenue from the existing taxi drivers. So finding the common ground between the old business and the new business is a key to this success of this business. Also, the labor forces might get a weakened protection because the Uber taxi drivers, for example, they are not regular employees of Uber, so they cannot receive health insurance or the other fringe benefits.
Okay. Well, it's not unusual to see people sharing cars here in Korea as well. I mean, sharing economy has set its foot in Korea, it looks like. And in fact, Forbes actually recently ranked Seoul as one of the world's fastest growing sharing capitals.
Sure.
So how far are we in the sharing economy space?
Well, when it comes to sharing economy, Seoul and the sharing economy kind of go hand in hand these days because the Seoul Metro government recently have decided to support these sharing economy businesses and organizations in a very aggressive manner. For example, they create a sharing city Seoul to create a program to enact the laws to support the program, to find the funding to support these startups as well. But why are they doing this and how much they will do it? We have to look at more broader term because when we look at sharing economy, when you look at the global market, when you dissect the word sharing and economy, the global market have more emphasis on the economy side because they want to grow the economy, they want to grow the bigger businesses such as Airbnb and Uber. When it comes to Korea, they have more concern about the sharing side of it. They want to create sort of a social economy of sharing goods and services. It's the perspective. Do you want to share the economy? Do you want to grow the economy? It all depends upon how you look at it.
All right, and coming off from that, recently the Korean government actually said it looks to support the sharing economy by removing regulations related to sharing economy models. Can you tell us more about those?
Sure. Simply put, they're looking to ease the regulations. For example, they are bringing the legal concept of temporary business for the sharing economy business operations because they want to give a little tax break to these small-scale operations as opposed to regular businesses. How much they will extend more, it all depends upon their perspective, I guess.
Okay, well, the sharing economy seems to be a concept that no one can resist now. I mean, it's getting bigger, it's growing, and a lot of countries are trying to adopt it. That what can the government do, the Korean government do, in order to better facilitate it and to safely, I guess, facilitate it?
There are things the government needs to do. There are things that the sharing economy businesses need to do. There are two things. For government, they need to set a clear guideline for both regulation and for support. They can't only regulate these economies because this might help grow the economy in the long run. So you need to find the balance between two. As for the businesses, because the businesses of this nature may not pay the taxes or may be used for tax evasion or the underground economy, they need to be carefully thinking about their future because if they continue to do that, there might be harder regulations. In general, when you look at the sharing economy as to be a true catalyst for the growing of the economy, I think the new business models of the sharing economy must meet the expectation of both the public as well as the regulatory authority.
Okay, thank you so much for your insight today.
You're welcome.
And that'll do it for me for today. As always, thanks so much for watching, and we'll see you right back here tomorrow for Your Business Daily.